Welcome back to China Price Watch. We're talking about the dramatic decline in Wenzhou's property market. After climbing to such great heights following the global economic crisis, Wenzhou's housing market simply crashed. Data from the Ministry of Land and Resources showed that prices have come down by 30 to 40% since their post-crisis peak. By the end of last month, the average housing price in Wenzhou was down to 15,777 yuan per square meter, or $235 per square foot. Some luxury homes that had gone for over $1 million have lost more than half of their past valuation. After years of leading the market in price increases, Wenzhou housing has now become the leader in price declines. October housing data from the National Bureau of Statistics shows that prices have gone down 12.5% year on year, and they continue to decline on a monthly basis as well. This continued slide bucked a national trend of real estate revival. Data from the China Real Estate Index showed that 84 of 100 cities surveyed had monthly price increases for November, with only 14 cities dipping in price. The collapse of many investments in real estate has hit both private entrepreneurs and the local government hard. Along with its reputation for small-scale manufacturing, Wenzhou is also a hub for private black market financing operations. With the city's exports crippled by low global demand and the real estate market in a free fall, this network of household credit froze up. The credit crunch took both local businesses and businessmen as casualties. With operations folding and debts coming due, multiple Wenzhou entrepreneurs jumped to their death. In response, the central government has anointed Wenzhou as an area for piloting financial reforms that would bring the city's shadow banking and private financing into broad daylight. But hit just as hard by the real estate downturn was the Wenzhou local government. That's because local governments all around China depend heavily on sales of public land for fiscal revenue. Nationally, land sales frequently average 40% of total local government revenue in a year. But in Wenzhou, this stream slowed to a trickle as developers turned cold on property prospects. Between January and March of 2011, 12 pieces of public land failed to attract bids at auction. Data shows that during the first half of 2012, Wenzhou saw an 80% decline in local government revenue from land sources. Even as the city put more and more pieces of turf up for auction, the revenue from transactions continued to decline. Despite increasing the supply of land between September and October, October sales were just half those in the previous month. Between the second and third quarter of this year, Wenzhou's land prices declined 18%. Asked about prospects for Wenzhou's real estate market, many analysts have tied it to the health of Wenzhou's broader economy. After decades of pioneering private business, the city hasn't fully adapted to China's new external environment. With the RMB appreciating, global demand in the gutter, and increasing low-wage competition from Southeast Asia, Wenzhou can't scrape by on low-cost exports forever. Other analysts pointed to the increasing financialization of the Wenzhou economy. Instead of pouring money into tangible improvements in manufacturing capabilities, profit-hungry entrepreneurs overdosed on real estate and other financial products. For the local economy and the local housing market to get back on solid ground, Wenzhou's famous entrepreneurs might have to get back to what they're best at: creating value. Don't go away, because up next on our question of the day, we'll be hearing from Beijingers on whether the Wenzhou property wipeout could happen in Beijing. Stay tuned.